Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets and co-host Harbor Access, we are very pleased you have joined us for our European Growth Conference. Our next presentation is from Challenger Energy Group. Please note you may submit questions to the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Eitan Uliel, Chief Executive Officer of Challenger Energy Group, which trades on the OTCQB venture market under the symbol BSHPF and on the LSE under the symbol CEG. Welcome, Eitan.
Hello, thank you for having me. Hello, everybody watching. So as mentioned, my name's Eitan Uliel. I'm the Chief Executive Officer of Challenger Energy Group. These slides are available, so I won't go through the fine print and we'll just get straight into it. What is Challenger Energy Group? We are an Atlantic margin focused energy company in the business of exploring. Our principal value proposition is we have a very high impact position offshore Uruguay, and that's what I'll take you through in some detail. We have an interest in two big assets in Uruguay. And for investors, we are the only access point to this really interesting and emerging international oil exploration story. As I'll explain to you, we're partnered with Chevron on one of our blocks, which is a hugely validating thing. On our second block, we've just completed our technical work program. We have a healthy cash balance, solid financials. We're at a really interesting inflection point for a small company. And as mentioned, we're quoted both on the AIM market of the London Stock Exchange and the OTCQB in the USA. So just in terms of the very basic market stuff, we have 250 million odd shares outstanding. Our current market cap is about 22 million British pounds, which is the equivalent of about 30 million US. We have 9 million cash, zero debts, a very low overhead. So we are fully funded for the next several years, meaning we don't have to raise any capital, so there's no potential dilution coming. And for a small company, we have a fantastic share register. It's very tightly held, large, sophisticated investors, as well as smaller investors through the markets, some institutional investors. You'll see their familiar names in the US like Morgan Stanley and Goldman Sachs, all of which I think is representative of what we believe is the quality of the business we've built and the huge potential that we see over the next 18 to 24 months. So jumping straight into it, our two licenses in Uruguay. We have one which is known as Area Off 1, and that license we have a 40% working interest. We farmed out a 60% interest to Chevron, who are now the operator, and I'll give you the details of that shortly. And we have a second license, Area Off 3, where we are still 100% of the license and the operator. In total, 19,000 square kilometers net, so it's a very big licensing position. And these licenses have really exciting exploration potential, multiple independent plays. I'll explain a bit why Namibia on the other side of the Atlantic is so important and relevant. And we're talking about world-class scale and materiality. These are not small potential oil fields. On our Off-1 license, we have P-mean, sort of an expected estimated ultimate recoverable of about 2 billion barrels and an upside 5 billion barrels. And on Off-3, where we've just finished our technical work and provided the market with an update, we're looking at 380 million barrels expected recoverable, and in a good case could be up to 1 billion barrels. So on any metric, these are material, commercial, potential developments and of interest to the big boys in the industry, not just small little companies. And we'll talk a little bit about Uruguay as a jurisdiction, but really the important thing here, where this all begins, is the technical aspect. And 120 million years ago, when the world was sort of one continent, and then the continental plates began to drift apart, a narrow marine seaway formed between what is now Africa and South America. The materials that ultimately are today's source rock got laid down, and then the continents drifted apart to their current positions. And what happened is in 2022, so not that long ago, a couple of massive discoveries were made offshore Namibia. The first one from Total, and then another one from Shell, and then a third one from Galp, which is the Portuguese national oil company. And what that did is it established definitively that there is oil-producing source rock in the Aptian horizons there. And most relevantly for Uruguay, Uruguay is what's called the direct conjugate margin of these discoveries in Namibia. So it's the same source rock that has now drifted over as the continent separated. And what that means, it may not mean a lot to non-technical people, but in the industry it meant everything. As soon as these discoveries were made in Namibia, people were able to seismically correlate over on the other side of the Atlantic the geological similarities and confirm the potential for this prolific new petroleum system in Uruguay's offshore. And as I'll show you in a second, that has had enormous ramifications. But before I do that, just a little bit about Uruguay. Again, many people may not even know where Uruguay is on a map. It is a small country in South America, about 3 million people, located between Brazil and Argentina. It is routinely rated as the #1 country in South America for many things. It has the highest per capita GDP. It's politically stable. It's a democracy, strong rule of law. And in relation to oil and gas in particular, has a very, very supportive policy environment and very attractive fiscal terms. You know, there are no signature bonuses, no royalties, long license terms, very stable, very predictable. So very unlike some of the more exotic oil and gas destinations around the world. And as I said, you know, you can look at almost any metric you like. Uruguay rates as #1 in South America. There's no corruption. There's high social mobility. You know, they rate very highly on the democracy index, etc. So in terms of the above ground environment in which to conduct business, it doesn't get better than this in South America. And then in terms of the below ground environment, as I said, these big discoveries were made in Namibia. And what has happened is, sort of in industry parlance, Uruguay has become what's called an exploration hotspot. So 3 years ago, not a single kilometre of offshore acreage in Uruguay was licensed. And we, Challenger Energy, were the first persons to apply for a license on the Area Off 1 block, which you can see on that map. It's down the bottom there. As soon as the discoveries were made in Namibia, the rest of the industry looked across the Atlantic, said, right, Uruguay has been technically de-risked in a big way, and all of the big guys, all of the majors began picking up blocks in Uruguay. And you can see on that map, Shell, YPF, which is the Argentinian national oil company, APA, a US-based company formerly known as Apache. They all came in and they picked up licenses, and in picking up the licenses made quite substantial promises to the Uruguayan government for work that would be done offshore, as opposed to our licenses where we made very modest commitments because we were there first. And at that stage, no one was really looking. So what you can see is that in less than 3 years, as I say, Uruguay's become something of a hotspot. It went from 0 to 100% fully licensed. And very importantly, with the exception of Challenger, all of the other license holders are either super majors or a national oil company. And as I'll mention in a second, that trend continued insofar as we then were able to introduce Chevron as a partner on our first license, Area Off 1. It's not just Uruguay. I mean, the margin continues, and there's been a similar explosion in activity and licensing in northern Argentina, where there are licenses held again by a lot of majors and seismic acquisition taking place, and also in the southern waters of Brazil, where there have been 2 recent bidding rounds, and Shell, CNOOC, the Chinese national oil company, Petrobras, other majors, picked up licenses there. So right across the margin, the impact of what's happened in Namibia has really sparked this uptick in exploration interest in Uruguay in particular, but then in also the surrounding areas. Now, what that means, you can see on this graph, we are one of the large license holders in Uruguay. Big commitments have been made, and we are the only access point for investors who would like access to the future story here. So we think that's a fairly unique proposition in terms of Uruguay and the industry more generally. To give you a little bit of information about our two licenses. The first one is Area of 1. So that we were awarded in June 2020, but then because of COVID, the license only actually commenced in August of 2022. Our work obligation was to do some reprocessing of existing 2D seismic, which we did. It was a modest work commitment. And it was on the back of that work that we were able to farm the block out to Chevron. And the next steps for this block are that Chevron will be undertaking a 3D seismic campaign that we hope will kick off towards the end of this year. So this is a very value-adding piece of work. And following the 3D seismic interpretation mapping, we hope that they will then move forward to drilling an initial exploration well on this block. What was it that Chevron liked? Well, the technical work that we did identified 3 prospects on the block, so multiple prospects, and these are material prospects in reasonably shallowish water, but we're talking about big possible volumes here. And ultimately, and these were all seismic attributes supported through the technical work we did. So this was enough to interest Chevron, and we ran a farm out process. We had more than one interested party, but ultimately we liked Chevron very much as a potential partner. And so this is ultimately what they farmed into. They see the potential of these prospects. We're going to look at them now through 3D seismic, and then hopefully that will lead to selecting well sites and drilling of wells. The nature of the Chevron transaction is very important for a small company like us. I mean, obviously it's a quality partner of choice, and it really validated all of the technical work and all the technical and above ground merits I've been talking about. In financial terms, it was a great transaction for Challenger Energy. Chevron paid us, they took a 60% interest and are now the operator. So we get all of their technical know-how and deep global operating capability. They paid us $12.5 million cash as an upfront entry cost, which is why we are in such a great cash position. And they've agreed to carry us on the next phase of work. So the 3D seismic campaign, up to a $37.5 million total cost, which the campaign will fit within that, will be 100% paid for by Chevron. So we have no exposure to that. And then if they decide to drill an initial exploration well, half of our share of that well will be carried as well. Now, people can do the maths themselves, but the point is that the market really hasn't, in my humble opinion, fully priced this into our share price. You can do the math on what this means on a sort of direct read through, and it's multiples of our current share price. And obviously we hope as Challenger that as time goes by and work begins and 3D seismic acquisition starts, that value gap will begin to close. Our second block of 3 is in the northern part of Uruguay. It's a shallow water block. The targets are relatively shallow. There, the block came with the benefit of existing legacy 3D data. We only commenced the first 4-year exploration period in June of last year, and the obligation was to reprocess 1,250 square kilometers of that historic 3D data. And we applied almost the exact same work process that we did with Area of 1. We reprocessed the data. We did some supplementary geochemical and geophysical studies, and we seismic attribute analysis, and all of that work culminated only a couple of weeks ago. If you go to our website, there is a presentation where we summarize the technical work that we did. We were encouraged enough with the results that we've decided to launch a farm-in process. So that farm-in process has commenced. We have, again, strong interest from the industry, and we plan to run that farm-in process through the balance of this year. Hopefully, we'll be able to choose a farm-in partner early next year. That will be a similar, we hope, arrangement to what we did with Chevron and Area Off 1. And really, that would lead to a second phase of technical work and hopefully a drilling decision there as well in the sort of 2027, 2028 timeframe. The technical work we did, kind of similar to what happened on Area Off 1, we were able to identify several prospects. 2 thus far we've assessed as material. They're not quite as big as the ones we saw on Area Off 1, but they are material nonetheless. They are called Bentaveo and Amalia, again supported by various seismic attribute analysis and other technical studies. And the volumetrics on these are in this table, and I mentioned them at the beginning, an aggregate P mean of about 380 million barrels and up to 1 billion barrels in a success case. The important thing here is the water depths on Area Off 3 are a lot less than on Area Off 1, and the reservoir depths are a lot less. So it means that even a relatively small discovery, and we think it would be in the order of 100 to 125 million barrels, would be economic. So again, material prospects, and we're reasonably optimistic about how our farming process for these assets will go. So we do have a lot of activity coming up over the next little while. This slide summarizes that, but we'll see 3D acquisition kicking off on Area Off 1, hopefully towards the end of this year. The only thing waiting there is a permit from the Uruguayan Ministry of Environment to allow the seismic boats to set sail. We'd see the results of that 3D seismic. On Area Off 3, the farm out process is the big thing going on, which would lead to a second round of technical work. And all of this, we hope, gets us to a place where in late 2027 or 2028, wells are being drilled, ideally 1 on each of our blocks. And ultimately, in the oil and gas game, that is where the value comes from: field work, from seismic acquisition, field activity, and then well drilling. And we're very excited about that. So I guess this is an investor conference. Why would you invest in Challenger Energy? Well, the first thing is, unlike many small companies, we think we're now an industry-validated investment proposition. We have Chevron, who farmed into one of our assets. We have activity going all over the region. We have smart money who are on our register. So, we hope that they're not all wrong. This is an exclusive opportunity. As I've pointed out, there are no other ways to access this part of the world if you're interested in exploration, frontier exploration activity in this part of the world. We think there's significant value upside in our current share price. And over the next 18 to 24 months, it's very clear, there is activity coming up, and it's that activity that ultimately creates value, multiple catalysts along the way. So it should be a very interesting next couple of years for our company. And that is the end of the formal presentation. So I think I will now turn to some of the questions. The first question I've been asked is, what were the key drivers behind Chevron's decision to partner with Challenger? Look, I can't speak for Chevron, obviously, but Chevron did an enormous amount of technical due diligence, as did all the other people who participated in our farm out process. And as I say, for a small company, I like to think we do very high quality technical work. Most of the people who work in Challenger spent their life working in oil and gas, energy majors. We know what they need to see. We know how to present things. We know the type of scrutiny that the technical work will be subjected to. And we took our time, we did high quality work. And as I showed in some of the slides, we identified prospects with big potential And it was material. It would be material to Chevron. It would be material to any major oil company if these things resulted in successful discoveries. So I like to think that the key driver behind Chevron's decision, I mean, obviously, Uruguay is an emerging destination and what's happened in Namibia, but I like to think that a key driver behind their decision was they were attracted to the technical story, and that is a function of the quality of the technical work that we did, and which I hope we've replicated and will be able to demonstrate through a farm out on all three. The next question I might go to is how do volumetrics and reservoir characteristics support the commercial viability of modest discoveries in shallow water settings? Well, I mean, commerciality is a function of three things: how much oil you found, and how much it costs to develop it. And the cost of development is as I say, a function of how complicated, I guess, the drilling is, and that to some extent is how deep the reservoir is and how deep the water is. So if you have a field which is not that far offshore and you're drilling in water where you can use almost a jackup rig and you don't need deep water drilling technology, the cost of a well might be $20 or $30 million and not $60 or $80 million, or as is the case in the ultra deep water, $150 million each. So the economics are dramatically different, and even a smallish discovery will stack up economically, whereas in a sort of an ultra deep water environment, you do need billion barrel type discoveries to justify the additional cost. I hope that's answered the question. The next question someone's asked is, can you speak to the experience and management team behind CEG? Yes, of course. We are a small company. We have a small team. I have spent 25 years in the extractive resources industry. I come from a finance background, though. I'm Australian, as you can probably tell from my accent. I've been involved in several very successful oil and gas ventures, from startup through to eventual exit. The most successful one being the startup of a thing called Arrow Energy, which ultimately was sold to a consortium of Shell and PetroChina for $4.5 billion in 2012. Our board members bring a range of experience. Our chairman, Ian, spent his life at Total. Another one of our directors, Simon, was more or less a lifer at BP, running all their exploration activities. Our Uruguay managing director, Randy Hiscock, who is the technical brains trust behind much of what I've said, he came to us from Shell, where he was their Latin American new business development guy. He's a geologist, and I could go on, but we have a lot of experience, a high quality team, although a lean team. We try very hard to keep our costs under control. But like I said, in this business, you need to know your audience, and our audience is developing up these prospects to be able to then show them to oil and gas majors, national oil companies, those sorts of people. And so coming from that background, knowing exactly what it is we need to do and how to do it has proved invaluable. And I think we've demonstrated that we kind of got the result on our first block, and we hope to get the second result on the second one as well. Are there other majors interested in Area of 3 is the next question. Well, we've literally just kicked off the farm out process there. All I can say is we have strong interest. I mean, you don't have to be a genius to look at the map of who's now in Uruguay, who's in the surrounding areas. There were lots of people who wanted to be in Uruguay but missed out because there were no blocks available. So we are seeing strong interest in our farm out process. Now, how that actually translates through the rest of the process, I can't predict. You never know who in particular is going to be attracted to the technical story that you're showing them. But at this stage, we are seeing a fair amount of interest from all the suspects you would imagine, and I think that bodes well for the rest of our process. I will see what the next question is. How does Uruguay's political stability, transparent legal system, and supportive energy policies benefit Challenger Energy's offshore exploration activities or endeavours? Immeasurably is the short answer to that question. As I mentioned, I've been doing this around the world for 25 years. I've been involved in oil projects in China, in Vietnam, India, Australia, the UK, various other countries in Latin America. I've said this in several forums. Hand on heart, Uruguay is top 5%. And that makes all the difference. When you need things done, the regulators are fair, they're straight, they're responsive, they get things done, and it's predictable. And that is immeasurably valuable because you can focus your energies on the technical work you need to do, and you can focus your energies on bringing good partners, doing good work, and you don't constantly have to be worrying about, are the rules going to change on us? Is someone going to try and, renationalize the asset, change the financial terms? None of that. It is genuinely a pleasure so far, and we've been there now for 5 years. It's been an absolute pleasure to be in Uruguay so far, and that speaks volumes right from the top. The policies have been set by the government, it's implemented by the national oil company, by the regulators, and it really is a good, stable, very attractive place to do business, and that makes a huge difference. I mean, companies like Chevron, Shell, a big part of their decisions around getting into assets like this is what they call the new country entry policy. They have to take that usually right up to their board to get permission to start doing business in a new country. So they check this stuff out very seriously as well. And again, I think, the fact that Uruguay is so well rated on all these things made it an easier decision for Shell, Apache, Chevron, et cetera, to get into Uruguay and now to start spending money and doing work there. I think I have one more question that I can do. So I'll do this one. Can you discuss your timeline to developing Area of 1 and Area of 3? Yeah, so in Area of 1, it's pretty simple. Chevron hopefully will get going on their 3D seismic campaign towards the end of this year. That will run for probably about 6 months. There then is a period of time where they need to analyze, assemble all the data, do whatever technical work they want to do. That leads to a well drilling decision. As I said before, we hope that a well gets drilled kind of late 2027 or during 2028. If that well is a success, you would expect a series of appraisal wells, and so and then you'd be looking into a development, etc. So probably a 4 to 5 years from now, if everything works out, you have a producing oil field. OFF3 would follow a pretty similar timeline. The difference, as I said, for OFF3 is firstly there is existing 3D seismic, so that doesn't need to be reshot. It just needs to be reanalyzed, and we've started that process, and that would be finished off in the second round of technical work. And the development of OFF3 would be considerably easier. As I said, shallow water, different kind of rigs you could use, fundamentally different well architecture and well costs. So it could happen a little bit quicker, and obviously if it's a slightly smaller field, you can get the developments going a bit quicker. But I mean, this is what's called frontier exploration. We're at the very beginning of a cycle. It could be very exciting, and it's not just for Challenger Energy. The surrounding blocks now, held by Shell, held by Apache, there will be activity on those too. Apache have a commitment to drill a well at least on one of their blocks. So the whole area will see a bit of activity, and hopefully, the success of any one person is the success of all of us. Certainly it would be a great thing for Uruguay as a nation if the timeline I outlined comes to pass, and we see activity leading to producing oil discoveries and then producing oil fields in that sort of 4 to 5 year horizon. So that is it. I'm out of time. Thank you very much for your attention, for all the questions. The slides are available online, and thank you. And I hope to do another one of these soon. Good night.